Welcome. This video explains the key clarifications from the official FAQs on the International Financial Services Centers Authority, Anti-Money Laundering, Counter-Terrorist Financing, and Know Your Customer Guidelines 2022. We'll cover who the guidelines apply to, mandatory governance roles like the designated director and principal officer, how a FAQ registration works, practical customer due diligence options, video-based customer identification, and critical reporting and sanctions obligations. This is a practical walkthrough intended to help regulated entities in IFSC implement the guidelines correctly, reduce compliance gaps, and avoid common onboarding and reporting errors. First, applicability. The guidelines apply to every regulated entity that is licensed, recognized, registered, or authorized by IFSCA to the extent specified. The FAQs also clarify that provisions apply to the financial group of the regulated entity, as specified in the relevant chapter on group-wide requirements. In short, if you are an IFSCA regulated unit, assume the guidelines apply and ensure the policy framework and operational controls exist from day one. Next, governance and accountability. Two roles are central: designated director and principal officer. The FAQs clearly state the designated director and principal officer must be two different individuals and both must be natural persons. So no company, LLP, or other legal entity can be appointed in those positions. Who should be the designated director? For IFSC reporting entities, the designated director includes the person heading the reporting entity. So the head of the regulated entity in IFSC can be designated as DD. Who should be the principal officer? The principal officer must have the necessary seniority and authority within the regulated entity and must be distinct from internal audit and business line functions. The intent is independence, so the PO can make unbiased judgments and advise management without conflicts. A key practical implication: for fund management entities, the principal officer under the fund management regulations is generally responsible for overall activities, but that person is not eligible to be the PO under these AML guidelines because the PO role must be distinct from business line functions. However, if that person is also the head of the regulated entity, they may still qualify as designated director. Common mistakes: attempting to appoint the parent entity's designated director or principal officer from onshore India for the IFSC regulated entity. The FAQs clarify the head of the regulated entity in IFSC should be the designated director, and the principal officer must have seniority and authority within the IFSC regulated entity. So parent entity appointments generally do not meet the IFSC requirement. One helpful simplification: the DD and PO appointed by an FME for implementing the guidelines can also be designated as DD and PO for AIFs managed by that FME. Now the policy foundation. Every IFSCA regulated unit must formulate an MLC FD KYC policy approved by the governing body or a duly authorized committee. The governing body depends on your structure: board of directors for a company, partners for a partnership or LLP, managing trustees for a trust, and so on. If your entity already has an AML policy under PMLA, you do not automatically need a new policy. If the existing policy already incorporates the key principles and elements required under the IFSCA guidelines, you may continue with it. If it does not, then you must incorporate the missing elements and get the updated version approved by the governing body or delegated committee. Next is FAQ registration and reporting. The FAQs clarify that regulated entities in IFSC, except an AIF of an FME registered with IFSCA, must register on FAQ's FAQ 2.0 portal. The reason is straightforward. The guidelines require regulated entities to furnish specified information to FAQ as per the PML rules. The registration process is two-step. First, register the regulated entity, and second, register the designated director and principal officer. The principal officer is the primary user for registration. If you operate in IFSC as a branch of an entity already registered with FAQ for onshore operations, the IFSC branch should still register separately for IFSC reporting obligations and should write IFSC as a prefix or suffix in the rename field to distinguish it. If your regulated entity holds multiple IFSCA licenses, the FAQs clarify that you still do only a single FAQ registration, and you should use the license or registration number of the principal revenue generating business while selecting all relevant lines of business in the portal. Customer due diligence, CDD, is where operational errors often happen. The FAQs clarify multiple acceptable verification approaches. 1. Offline verification, meaning examination of original documents and retaining copies, or obtaining certified true copies. For non-resident individuals including NRIs, certification can be done by certain officials such as authorized bank officials in FATF compliant jurisdictions, notaries, judges, certified public or professional accountants, lawyers outside India, embassies or consulates, or other authorities as specified. 2. VCIP, video-based customer identification, primarily for onboarding Indian nationals with specific procedural and technical standards. 3. Using business facilitators, but only if they are domiciled and regulated or registered in jurisdictions that are not identified by FATF as high-risk jurisdictions subject to a call for action, or from countries specified by the Government of India through order, agreement, or treaty. And 4. Except for high-risk customers, verification can also consider information from official sources, reputable research reports, reliable independent public information, and recognized commercial databases, subject to the guidelines conditions. The FAQs provide detailed operational guidance for NRI onboarding through VCIP. VCIP can be used to onboard NRI customers only if specific conditions are met, including Aadhaar and an active Indian mobile number for OTP, low-risk classification, residence in specified jurisdictions, and having a bank account in a specified jurisdiction with valid proof of current address. If the current address cannot be verified from reliable or independent sources, the account must be opened in debit freeze or inactive mode. It becomes operational only after the first credit is received and verified from the overseas bank account that the customer provided as proof of current address, matching name and address with the official documents before activation. Verification of the first credit does not necessarily require SWIFT. It can be any reliable method confirming account holder details. Also, if the current address can be independently verified, such as via an official database, a bank statement reflecting the current address, or a KYC record, then the debit freeze approach is not required. Suspicious transaction reports, STRs, are a core reporting requirement. The FAQs clarify the authority is affiant and the principal officer is responsible for timely submission. On disclosure, the FAQs clarify that information relating to suspicious transactions can be shared only in limited circumstances, internally for duty performance, with lawyers for legal advice, with supervisory authorities, under court order, or within the financial group, consistent with the anti-tipping of intent. Finally, counter-terrorist financing and sanctions compliance. If a customer matches a designated sanctions list, the regulated entity must immediately inform the designated nodal authorities and also send copies to the state nodal officer, IFSCA and FAQs without delay. The FAQs clarify, without delay, as the same business day, but not later than 24 hours in any case. Where the match is beyond doubt, the regulated entity must prevent the designated person from conducting financial transactions and follow the required communication and freezing procedures under the relevant orders and circulars. Moonsis and Management Consultants LLP, a trusted partner for CES and IFSC excellence. A pioneer in establishing CES and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling complaints, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BADF, and ancillary regulations. A&D FinTech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.